Hey there, I'm Tiffy Rubinet, General Manager at Wealthi. If you've been listening to our podcast, hopefully enjoying it, and you are considering investing in real estate, then reach out to the team. We can offer you a free strategy session and we would love to help you out. Our contact details are in the description below. Enjoy today's show.
Hey guys, today we have a really good show with Stephen Barlow from Clearstate. He is the general manager over there. They are a Greenfield developer. Effectively, that means that they go out, they buy big swaths of land and they cut it up into little bits and sell it to the general public. Now, we thought it'd be very interesting to talk to him, and it was because he has a very good idea on what makes a good house and land subdivision. Also has a very good understanding of what's happening in the current market. He's been doing this for more than 20 years and has some very interesting insights into the current supply levels. He believes that there is a huge undersupply of stock. Listen to this podcast, lots of good tips. I hope you enjoy the show. Hello everybody, Domenic Nesci here today with Steve Barlow from Clearstate. Thank you for joining the show today.
Thanks for having me.
So, Steve, we want to talk all about Clearstate. I want to talk to you as a professional about what you do. I understand we just chatted before the show. You're also a bit of a developer, and you've been doing developments for many, many, many years. But before we dive into all of that, can we learn a little bit about Clearstate, what you're doing over there, what the business is, and how it all kind of comes together?
Sure. So business started in 2011. So we're a land subdivider. We basically operate mainly in Sydney. Doing projects of anywhere from 50 to 200 lots, where I suppose our sweet spot is the fragmented land that is the Greenfield market of Western Sydney. That's where we've cut our teeth. The majority of our projects have been in the northwest, with a couple in the southwest, and we've had one experience in Melbourne, which is positive, and we're keen to go back there and do a little bit more work down there. But primarily, we think about ourselves as a small developer who does a good job for our customers and gets them into new homes.
Yeah, it's interesting when you hear a developer say they're small and they're cutting up 50 to 200 lots at a time. I mean, relatively, yes, when we're talking about Stockland and where you've come from. Yes. But to all the people that are listening out there, so essentially you go out, buy effectively farms or big land subholdings or bring a bunch of owners together, and then you go and get the applications necessary to then cut it up into much smaller bits. Yes. And then you sell it to the general public, or you then get builders involved to then sell it, and however it gets sold, it starts with you. That's right. So we're an end-to-end developer in that we acquire in the first instance. We go and get the necessary approvals, as you say. We sell the project typically to mum and dads, first and second home buyers, and from there we deliver the construction and create the title that mum and dad ultimately build their dream home on. We don't build the house. We do partner with builders to demonstrate what our customers can do on the land, but we don't build houses, we just do the land. And can I ask you a little bit about where you've come from, how you landed in Clearstate, and you know, why you in this role and what we're doing? So yeah, I've been in the Greenfield development game for 16 or 17 years now, lose track of time. So I've had roles at Mirvac after that at Stockland for almost 10 years. So I've come from the big master plan community space. I got an opportunity to run Clearstate 4 years ago, and I'd always had in the back of my mind that doing private development in a smaller company was something of interest. The opportunity fell into my lap. I suppose it worked out that I took the job, and it's 4 years later, and we've kicked a hell of a lot of goals over that time. And can I ask you about one? That's an impressive track record, because you've worked with two of the biggest developers nationally and globally in some respects. Can I ask the difference between working or buying from, let's just say, a 50 or 200 lot subdivision or a master plan community? And what are the differences between the two? And how do our investors out there think about the two, and why they'd go for one versus the other? There's a lot of similarities. Typically you'll have a vendor or two that you're trying to negotiate with. The quantum of dollars is just significantly different. But nonetheless, in most instances, the vendors are looking to maximise the value that they get out of the transaction. So that's their motivator. Typically, the vendors have only got one asset, which is the land that they're selling, and they want to make sure they maximise value out of that. And we're obviously trying to get the best commercial deal that we can get. So really, there's not a lot of difference other than the check size.
And then for the end purchaser, if I'm actively looking to buy in a 50 or 200 versus, and that's a smaller subdivision relatively, versus a master plan, larger Mirvac, Stockland, Lend-Lease style development, what are the merits between going for the larger versus a smaller, or how would you sort of think about the differences between the two as an investor?
Generalising, the bigger projects have lots of amenity on their master plan. Typically it'll be proposed. So it's amenity like schools and shopping centres, etc., that will come, but it's typically proposed. So you're having to wait for that amenity. The smaller projects are within the same, call it local catchment, but are typically closer to the existing amenity. Because the projects we deliver are smaller in size, they tend to be closer to existing infrastructure, whereas the larger land holdings that the bigger master plan communities are placed on are further out. So you've still got the same proximity to that amenity, but you're not quite as close. So I think that's the key difference. Ultimately, you're buying a very similar product. You're still getting benefit from the infrastructure that the government's going to deliver on a broad scale, but you're typically closer to the existing amenity. So to give you an example, we've got a project or a couple of projects in Rouse Hill. There's a new train line there, or relatively new train line. We're within 1.5 kilometres, whereas our biggest competitor in that space is more like 4 or 5 kilometres away. So you've got the benefit of distance.
And if I'm thinking about this with my investor hat, and I'm thinking about the differences between the two, do you think there's any perceived risks with working with a smaller group or going into a smaller subdivision versus a master plan community and name brand? And are there any specific things that an investor should be thinking about before buying in either a smaller or larger, a name brand or not?
Definitely. Obviously, you've got the brand with the bigger guys. They've got the balance sheets and the track record to support what they're doing. So you've got some comfort there. At the smaller end, depending on market conditions, we find that there's a lot of non-professional developers developing. So what I mean by that is the doctors and the dentists who have got some money look at property development as a way to maximise value and try and become a developer. I wish it was that simple. It's not. And often they can get themselves into trouble not knowing what they're doing. So I suppose the advice at the smaller end of the project scale is to really do some research on who the developer is and what track record they've got before you go and commit.
And would you say there are any obvious signs if you're seeing it come out of the ground? I mean, let me just preface this. When I go to different developments and I'm going and having a look at the different Greenfield sites, there's almost a visceral differences. What I mean, you can feel it. You can see the streetscape. You can see if they've got power lines above ground, underground, the way they curve their guttering. Is someone taking control of the landscaping? All that kind of stuff. Is there anything that, to the untrained eye, that you'd say, look, keep an eye out for? These are the top 2, 3, 4 things that you should look at when you're looking at Greenfield sites?
It's probably before the construction even starts. So typically, in the way development works generally, developers are funding via banks. You've got to get a level of pre-sales before you'll get that funding commitment. So I think the first sign is if you're asking questions that don't get answered appropriately, so you're asking for information on what the lot size is, for example, what building covenants they might have, and that sort of thing. If you're not getting an answer that satisfies you and it's not professionally presented, that would be my first red flag. I would look and say, well, if they can't provide the information for me up front, what's the back end process going to look like, and are they even going to get there? So that would be my first pass, I suppose, to make sure that you're comfortable with the level of professionalism and information that you're providing, because at the end of the day, typically you're buying off the plan, and you need to be really clear on what you're buying so that you can make sure the contract obligations of the developer are followed through with.
So that process and professionalism is a critical part in your mind because it's telling you what their back office is like.
Absolutely. So we, as part of our market sounding and just staying on top of what's happening in the market with competitors, we do a lot of mystery shopping, and we often find with I'll call them less professional developers, the level of information that you get when you request it is significantly below what we would provide or what you would get if you were going to buy off one of the larger players. So yeah, that's certainly the first thing to look out for. If they can't articulate what you're buying, when it's going, what the program is, what the process is, then I'd suggest you do a bit more research on them.
And you mentioned something important, and that was building covenants. What do you mean by that? So if I'm buying a block of land, what are building covenants and why are they important to me? Like, why do I want covenants on my land that I'm buying? That sounds scary.
Yeah, it's an interesting topic, and probably one that if you asked a few experts, you'd probably get a diverse range of answers. My personal opinion is that building covenants were a wonderful thing 10 or 15 years ago when the quality of contract home construction and facades weren't what they are today. The building component of the Greenfield space has significantly improved their output and what they do, which in my mind makes building controls redundant. What it can do on the negative side is it's to say if a developer puts in the covenants and says every house is going to have these controls in place, as soon as someone doesn't comply with those controls, noting the developer has no legal right to challenge whether someone's complied with them or not, it causes issues with the customers who have complied. So they've gone through a process of potentially spending a little bit more money on compliance. They've gone through the process of compliance, and then their neighbours build a pink house. The developer has no legal ability to challenge that pink house, and all of a sudden it devalues everybody else's house.
That's interesting.
I think personally, I think they're a negative.
It's interesting because I understand exactly what you're saying. At the start, it's good because you want there to be a general level.
Yes.
You know, you don't want people putting engine blocks on cinder blocks at the front of your house.
Exactly.
You don't want trailers parked at the front. You don't want a shoddy or poor quality build that's going to devalue the street.
Yes.
However, on the other side, you don't want to be too restrictive where everything looks the same and it looks like a big cookie cutter
Absolutely.
area. And then the other side, which I hadn't thought about, which is if some people comply, but then someone doesn't, it just ruins it all.
Yes. I suppose the other thing that always goes through my mind, in the large majority of the customers that we transact with, it's the biggest investment they'll make. And for a developer then to say, well, here's what you can and can't do, doesn't really sit well with me. And like I say, the quality of build has improved. The planning controls have improved things as well. And the outcomes we're getting are really, really good. The builders are wanting to differentiate themselves with really good design, and that's just pulled everything up. And I think for me, the covenant controls are a thing of the past.
Okay, so in your mind, you'd prefer to have freer rules and allow people to build the stuff they want to because, generally speaking, people are building good stuff.
Absolutely.
Makes sense.
Absolutely.
One question that comes up all the time for us is, it's interesting for us because we are across Australia. We're in Brisbane, Melbourne, we're in Sydney. And one thing that pops up all the time when we're talking about land and subdivisions is oversupply.
Yep.
I can see you smiling. And people have an idea that in Sydney, there's an oversupply of land. And that if they buy that block of land, they're just going to keep on developing and it's going to devalue their block of land. What do you think about this? Is there an oversupply in Sydney, let's say, of land?
I can only speak specific to Sydney at this point. But if you asked me what my biggest concern for the Greenfield industry is, I would say lack of supply. It's concerning for someone who runs a development business who needs a pipeline to continue that business, that the government hasn't rezoned a Greenfield release area in, off the top of my head, 6 or 7 years. So the government are, I suppose, behind, in my opinion, as to where they should be with levels of supply. And as we've sold stock over the last 6 or 7 years and it hasn't been replaced, we're just getting to a point where there's chronic undersupply. To give you an example, there's a release area in southwestern Sydney called Austral. Off the top of my head, 5,000 or 6,000 lots, was rezoned in 2014. 2,600 or thereabouts lots have been created out of that release area. There's a cap on the amount of supply because of sewer servicing constraints of 1,700 lots until 2025. So the government thinks that there's all this land that's been rezoned, but it's either been developed or there's a constraint on what's left. So in my view, we've got a severe undersupply problem And I see that when we're trying to buy, because there's a reducing number of sites that are available or could be available. There's more competition for those sites. And I think part of the significant price growth we've seen in the last 6 months is not only a consequence of low interest rates and government stimulus, but it's also lack of supply. If you do a realestate.com search on any of the Greenfield markets, Box Hill, Austral, Marsden Park, there is very little listings. And the reason for that is developers have sold out of their stock.
So that's very interesting to hear. We've heard it, we understand it, and we know it, and there's a reason why we're in this space. But to the average person or someone that's new in this space, they look out and they say there's greenfields everywhere. Isn't there just unlimited supply, or feels like it's unlimited? Can't they just keep on developing until the cows come home? Or why is there such an undersupply? How is it happening? And what's this whole redevelopment and
yeah. I think the large majority of it is the fact that there hasn't been continuing rezoning. Rezoning's come through government. Let's compare Sydney and Melbourne. Geographically, in Melbourne, you could go all the way to Adelaide. They could develop all the way to Adelaide, really. Whereas Sydney, we've got constraints with the Blue Mountains, we've got constraints with the harbour, etc. So there's only a limited amount of greenfield land that can be developed over time. And with the population growth that we've had, that hopefully continues over the next decade or so, that oversupply is only going to, the undersupply is only going to become a problem.
You're absolutely right. Geographically constrained in Sydney, you've got national parks, you've got the Blue Mountains, you've got the harbour, and then you're locked.
That's it.
Brisbane, you can go north or south.
Yes.
For a very long time. And Melbourne, you can just sprawl. As you said, you can go to Adelaide, you can just go all the way out.
That's right.
So it is interesting, and it's one of the reasons why people are experiencing such phenomenal price growth in these areas. May I ask you just a little bit off topic? What are your thoughts on the second airport, Austral, Leppington, Badgerys Creek, that whole area? What are your thoughts on that area, and how do you kind of frame that in your mind?
Well, there's another example of where, from a residential perspective, land is taken up by other uses. So yes, there's a lot of greenfield land that hasn't, or farmland, let's call it, that hasn't been developed, but not all of it's going to be residential. So you've got the whole second airport precinct, which has some residential proposed, but the large majority of it's going to be industrial and heavy uses. So there's land that won't be servicing the level of residential demand. I really like it. I think it's fantastic. It's obviously been in the works for 25 odd years. What they've done so far is really, really positive in my opinion, and it'll create a little bit of a big sub-economy down there, which will only benefit the southwest.
And do you think it's too late to be investing in those areas as an investor, to be buying, a house and land pack, or you think the prices have peaked?
No, not at all. The southwest probably has further to run. I think what I've certainly seen in my experience, if I go back, let's say 10 years, the price comparison, the northwest versus the southwest, was 100 to 150,000. That's blown out in recent times. I think that will contract, particularly on the back of the airport and what I suppose that's going to do economically for that region.
Yeah, that's very interesting. I hadn't thought of it that way, because the northwest has phenomenal prices. Yeah. Box Hill, Marsden Park, that whole area is it's huge own catchment area. Median house prices. What's crazy to see house prices, not median, but just house prices hitting 1.5. And you're like, what? It
is insane, is the word I would use. To put some numbers around it, we had a project that we put to market in August last year. A 300 square metre lot, which is sort of our smallest product. We were selling for 460 or thereabouts. Project launched not long ago around the corner. They're selling the equivalent lot for 600 to 620. So within the space of 6 months or thereabouts, you've seen that level of price growth.
And $200,000 price growth in the land.
In the land, yeah.
And
so that's part of my logic on the supply. If there was all of these projects that could bring stock to market, I don't think the market would sustain that level of price growth. There are other factors, as I say, interest rates and government stimulus, which have certainly helped. But the fear of missing out that's been in the market in recent times is, I won't use the word largely, but a considerable proportion of that market growth has been as a consequence of, I can't find a bit of land that I want to buy, so whenever I do get the opportunity to buy something, I'm just going to grab it. I don't really mind what price it is, I just need to get into the market and I just need to buy. I don't have choice.
Yeah. You can certainly see and feel it. And it's interesting for you to say then that the Southwest, you believe, or Southwest, has a bit of catching up to do. Because land values are not $600,000 for a 300 square metre block currently.
No, 450, like Austral, for example, is about 450. So it's got a way to go. And I think as the airport precinct matures over the next 5 years or so, the Southwest will catch up. There's no doubt. The level of job creation alone will have a bearing on that.
And do you have an opinion on the subdivisions and things up north towards the Central Coast and Hunter Valley? And would love to hear your thoughts on those areas and land supply and what you think the opportunities are in that market, or if maybe you don't think there are opportunities, it's better to stick on this side, or...
We typically stick to Sydney metropolitan, which includes the Central Coast. The supply constraints up there are pretty similar to Sydney itself. What I think we have seen as a consequence of COVID is the working from home situation has made those markets more appealing, as has the Sydney price growth. So people wanting to either cash out or not able to afford Sydney can go further north but still be able to get, I suppose, a job in Sydney. So I think that's a trend that will continue. So those more regional markets, if I can use that term, will become more appealing.
That's interesting you say that, because one of the things that we would discuss 5-10 years ago when looking at those more regional markets, Central Coast, Hunter Valley, all those areas where you can get some really cheap blocks, was the employment opportunities. There wasn't much, in some areas you're travelling an hour into Newcastle, which is a satellite city. It's the 7th or 8th largest city, but it's still not Sydney. And then driving into Sydney, it's 2 hours, or an hour and a half, 2 hours roughly. So it was far, but the fact that you now can work on your laptop and be in your living room and spend $600,000 or $700,000, have a nice house and land pack on a good sized block.
Yes.
I mean, you could go out. Very
appealing in that sense. I think what it'll do within the markets that are within, call it a 2-hour drive of Sydney, and I include Wollongong in that, it will probably take some of the volatility out of them, which I think will appeal to more developers. If there's a more stable employment opportunity as a consequence of working from home, then some of those markets will potentially be, in the eyes of developers, less volatile.
And I'd like to go back to one of your earlier statements where you were discussing a foray in Melbourne. Can you tell us a little bit about that and where you're looking, what areas in Melbourne and what you plan to do there going forward, if any?
Yeah, I would call us opportunistic in Melbourne at this stage. We're looking on a deal-by-deal basis. We're starting to build a bit of a network down there who are bringing us some good sites. Because we don't have, I suppose, the intimate knowledge that we have of Sydney, we're just treading carefully on those opportunities. So it's really at this point a bit of a case by case. Where we see a good opportunity, we'll put the necessary resources into it and go in that direction, try and acquire the site. So it's a little bit opportunistic at this point.
And what area did you develop? Is it still available? What was that market, and how was what was it like developing there and the people's sort of reception to it?
Again, we only had a limited experience. We had a joint venture partner on that project who did a lot of the heavy lifting. What I think we found in comparison to Sydney was that the planning controls or the planning arrangement, securing approvals and the like, seemed to be easier. We were in a semi-regional market in Gisborne. So I think that was probably our key takeaway, that the planning side of things was just more orderly and easier to navigate. Interesting. Okay, well, we watch to see what comes in the future of your Melbourne markets and also the stock that you bring into Sydney. 2 more questions for you. One, the first question is, how do you pick
your sites? I mean, obviously, as you're saying, some of it's opportunistic and kind of in this market, get what you can get.
Absolutely.
But is there any other forethought that goes into what makes an ideal site? Like, what's at the top of your mind when you're thinking, oh, this is going to be a good subdivision for us, and what's the exit strategy, and what are you thinking?
Well, I suppose our first filter is their demand, is their customer demand. So can we sell the end product? That's our first filter. Our second filter is planning led. So in most instances in Sydney, that'll confine us to the growth corridors of the north and the southwest, where the government has done a really good job of streamlining the planning process as best they can, and that makes the risk of planning significantly reduced on our part. We don't take zoning risk, for example. So that's the second filter. And then the third is location, so proximity to existing amenity or proposed amenity. Again, the customers value that, and therefore that's what we look for. So yeah, really we're wanting to be path of least resistance when it comes to demand and when it comes to approvals, and therefore we're taking some of the risk elements out.
Okay, that's awesome. And then I guess the last question, and I want to sort of round it all out because, one, thank you very much for coming on the show today. It's been an absolute pleasure learning from you and how you think about developments and subdivisions. And what I take from this is you've been doing this for quite a long time. You are a developer inside the business, outside of it, and you've got a wealth of knowledge in the residential property space or commercial residential space. Have you got one hot tip for people that are looking to build a wealthy life? What's the key takeaway? What's something that you've learnt in your travels or your journey for someone that's trying to, build a wealthy life, whatever that definition is for you?
In a property sense, I would say find opportunities where you can add value. So whether that be buying a greenfield lot off a developer like Clearstate and building a house on top of it, you're adding value. Where you can find opportunities like that, I think you ultimately end up in a better position. So that would be my advice. Don't just buy something for the sake of buying something. Buy something that, whether it's immediately or in the future, you can add value to. Another example of that might be you can add a granny flat to the back of the house that you buy, and therefore you're adding value. It might be a plan that you put in place and you don't enact it for 10 years, but you've got a plan to add value and ultimately create wealth as a consequence.
I like it. It makes sense coming from you. You're entrepreneurial, you're a developer, you like to add value where you're going, cutting up sites and doing different things. It makes a lot of sense. Buying something where you can add value is great because then you've got that margin, you can use that to then go buy something else again. I want to say that adding value, it's never straightforward, is it?
No.
So also be prepared to learn some hard lessons in that journey.
Absolutely. I suppose from personal experience, I mentioned off air, we're going through a process of complying code duplex project, which has been fantastic learning experience for me, something that I don't have a lot of experience in, so it's been fantastic to work through a complying code approval over the last couple of months. So learned a hell of a lot. So far it hasn't cost me anything, which is good. Just experience what you can and where you can add value, ultimately it'll put you in a good position.
Thank you very much for today. It's been an awesome show. For all of you that want to know more from Steve and the team, feel free to send us all your questions. And just a little reminder that we have launched the Wealthi Masterclass. So there's a whole heap of lessons in there in Academy, so you can learn about properties, how you can buy them, the ways you should be thinking about it, and different ways you can add value too. So again, Steve, thank you very much, and we'll hope to hear more from you soon.
Great. Thanks very much.